Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to episode 81 of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, the main man of the hour, AJ Brown. Good morning, AJ.
Hey, Sip, how are you doing?
Today is May 19th. I'm doing very well. I feel like the markets are optimistic. Things still seem a little bit slow, but we may have broken up to the upside a little bit here this week, given that our government is deciding to work with each other.
Yeah, I think that's the main driver. So on Wednesday, there were some headlines from President Biden that a debt ceiling skirmish is going to get solved before it becomes a problem. And then on Thursday, that was reaffirmed by Kevin McCarthy, that leads the other viewpoint in this discussion. So, yeah, I think that's the big driver. In addition, we got some news on Wednesday from one of those mid-sized banks that was kind of seeing a bunch of depositors leave and seeing some investors, right? Investors get worried because the depositors get insured. The investors wind up with nothing. So the investors were starting to pull their money. What I'm speaking about is Western Alliance, but Western Alliance came back to us on Wednesday as well and said, hey, deposits are up and depositor quantity, the actual people depositing at our bank is up. And so that gave people some comfort as well. And finally, Target reported on Thursday, and Target reported good earnings for the quarter. See, what we had been seeing is that people were starting to take their money and go to stores like Walmart and Dollar General, taking their money away from stores like Kohl's and Target. So for Target to come back and say, actually, we had a very good quarter, well, that gives people confidence as well. So that was kind of the big driver on Wednesday and Thursday's action. Thursday, we actually saw in the morning some negativity because should we jump into the economic news?
It kind of all spirals into what's going on this week, although it didn't deviate much from expectations, right?
Right. Well, it's a little bit more positive than was expected. So if we take a look at retail sales that was reported on Tuesday, the actual retail sales, as you can see here, it was a little bit less than expected. But if you take a look at what was happening last month, where we actually saw a decline in retail sales, it's back up. And then if you start to factor out car sales and fuel sales, well, now it's way higher than expectation. So, in other words, retail sales is kind of bumping back up instead of slowing down. And then you look at industrial production. Industrial production is also bumping up pretty heavily, and capacity utilization. There's a lot of people at work, building stuff. So that's kind of showing that things are not slowing down. And then you take a look, well, in the housing starts and permits, they're kind of holding steady, a little bit below expectations. And then you take a look at existing home sales, that's kind of slowing down. One last thing that I didn't point out, we had the Philadelphia Fed Manufacturing Index. So each one of the regional banks also reports throughout the month about their region. And the Philadelphia Fed Manufacturing Index was also solid. That also gave way to yesterday morning, the Dallas Fed president saying, hey, the Fed may need to raise interest rates again. So yesterday morning, before Kevin McCarthy spoke and kind of got people back on track, there was a little bit of hesitation because, to have the Fed come back when there's all this good news and say, well, there's so much good news, we might start tightening again in June. That, in other words, the Fed's activities, they just don't seem to be having an effect right now.
Yeah, and I believe that that's what spiked our the likelihood of another interest rate increase, right? I believe earlier next last week or some it was like 10% and it jumped up to, I mean, I don't know, you usually have the chart, but it's like maybe
Yeah,
20
let's
or
see if I can pull that up.
up to 40%. And so we're it's kind of like, okay, things are hot. The Fed is scared to pause, right? Even though we know that their actions are delayed, right? They're they because the data's coming out, they have to make these comments, and the betters are saying that we're going to see another rate hike.
Yeah, I mean, take a look at what we've got here. So this is showing that. So this is here we've got what it is right now. So there's a 65% chance that there won't be a rate hike, 34% chance that there might be a quarter rate hike. That was about the same as it was yesterday. But you're right. 1 week ago, it was more like 85% chance that investors believe there would be no rate hike and 15% quarter point rate hike. So it's more than doubled um, since just 1 week ago that the expectation is that the Fed may actually do, it's 2 to 1 right now, but it's raising over here. So that's something to pay attention to. You're absolutely right.
But it's not scaring the market, right? The market is
No,
continuing to push up.
well, it scared them a little bit yesterday morning. So if anybody tuned into the market right at market open, these kind of hawkish comments from the Dallas Fed, they caused the market to shrink a little bit. And then, the bullish comments from Kevin McCarthy about the debt ceiling caused people to say, well, even though the Fed's talking about next June, let's focus to the fact that we're talking about like right now, and this is positive news, so let's keep buying. And actually, even going in now, one of the things that's interesting is as we're speaking right now, Jerome Powell is scheduled right now to be speaking as well. And so I'm sure as soon as we get off this call, investors are going to dissect what he's saying. And I'm not sure right now if he's being hawkish or dovish. So that's going to have probably an effect. But as of right now, if we take a look at what's happening today, well, so we saw some bullishness early in the morning. Let's actually go to an intraday chart and see exactly what's happening right this minute.
Well,
Yeah, so
because last week we talked about the consolidation and whether we were in for a breakout, and we weren't sure whether it was going to be to the upside or to the downside. And
yeah,
looks like we're seeing a bit of a breakout, but you haven't confirmed it yet, right? Given some of the tools that you
well,
use.
so we've got overhead resistance and we're barely breaking. So a breakout usually, so think about the dynamics behind a breakout. So what happens is there's some initial buying, and remember, people perceive levels of support and resistance. So for instance, maybe there's like a level of support or resistance here. And so what a lot of people do, sorry about that, I'm all over the place. Imagine there's a level of support or resistance at 4,200. What people will do is say, I might, if it's going to break out, I'm going to put a limit buy order here at $4,225. And so a lot of people pile on to that mentality of, if there's going to be a breakout, price is going to get up above that $4,200 level, and I'm going to be one of the first people to jump on it. So I'm going to put this limit buy order in place so that if price does hit that upper level above that level of perceived resistance, I'll just automatically buy into it. What that does is it creates a self-fulfilling prophecy. And so what we haven't seen yet is price get into that level. And some of the other hints that I have that says this breakout that we think we're seeing doesn't have much legs to it is usually before that kind of breakout, a breakout that's going to be really significant. I would see implied volatility rise up. And I'm looking at the VIX right now, and there hasn't been any increased option purchases, right? The implied volatility, if anything, is getting lower and lower. So it almost tells me that, the last couple of days of buying doesn't have what it takes to really make a big, significant breakout. You're right. We had that consolidation, and we're seeing like a couple of maybe $50 worth of price action, but this isn't, a breakout would be like $200 on the S&P 500, not $50. So I almost feel like today, and I'm already seeing what I call a Lincoln's hat. You can kind of tell that bar pattern looks like a Lincoln hat right there with his stovetop hat. I see a Lincoln's hat forming, which usually means that already the buying is done. Now, of course, it's the morning session. Jerome Powell is speaking. Anything can happen by the afternoon session. But I almost feel like we had 2 days of buying, just like we had 2 days of buying back on April 27th, April 28th. But this is nothing to get excited over. This is just investors being antsy, right?
Yeah, and it's Friday, and it's options expiration, right? Third Friday of the
It
month.
is options expiration,
Okay.
yeah.
We're still kind of on the back leg of earnings season, right? I don't know when technically
Mhm.
that's gonna end, but we've had
I
some
mean,
earnings this
now
week.
companies are like peppering their earnings throughout the whole quarter. So the big bunch of them is done. The big bunch of them is done.
Well, and so we've done some analysis of the charts, and there are some opportunities, right? And so throughout the rest of the show, what we're going to do is we're going to dig into AJ's options trading strategies. We're going to go over some opportunities. And in the meantime, we want to give everybody an opportunity as well to learn more about Trading Trainer AJ, the program. He's got an amazing daily workshop where he breaks down this premium selling strategy. If you don't know what premium selling is, we're going to dig into some opportunities throughout the show. If you do know what premium selling is and you are looking at a position yourself, feel free to throw it into the chat. If we have time, we'll go over it. But as I mentioned, the link to AJ's workshop is going to be in the chat. We are going to take a little break, give you an opportunity to head on over there and sign up. We'll be right back. And when we do come back, we'll talk about a little bit AI. We'll get AJ's pick of the week, and we'll also do our trading speed round.
Mhm.
Stay tuned, folks.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. I'm excited for this week's trending topic. It's one that
Mm.
we've discussed many times, one that we discuss on a daily, week-to-week basis
Yeah.
amongst the team in terms of finding new tools and technologies to really improve the experience for many of the things that we're doing, from investing to writing to creating content to
Mhm.
learning. And so the trending topic of this week is AI. Should we
Mhm.
invest in it? How do we use it? How
Mhm.
should we use it? What are your thoughts on that, AJ?
Well, okay, and this is spurred. I had a great conversation with somebody yesterday. They called me, and it's interesting. We run our school here, and if the folks in our customer support, customer success department are all on the line, then we have it so that the calls come to my desk. And so I love answering these phone calls, and I got to talk to somebody who's been a follow of ours for a while. It actually was a son of somebody who bought my course, my home study course, probably close to 10 or 15 years ago. And it was interesting because sometimes you wonder if people who buy your course actually even take it out of the packaging, let alone watch the videos and go through the workbooks. But this son had gone through his father's course so much, he was almost quoting me from 10 or 15 years ago. And I remember saying that stuff. And it was like very humbling to hear somebody who was such a fan of my material. But with that said, we talked for like a good half an hour about different investing strategies and where he should go with premium selling and should he get into some swing trading and all of that good stuff. But he actually brought up right at the end of our conversation, he's like, listen, there's this artificial intelligence stuff coming down the line. I keep seeing it all over Facebook. And should I be investing in those companies and should I be using it? And we've been talking about it, like you mentioned. You and I have been talking about AI like nonstop. So, couple of thoughts. First of all, there's some big players involved, right? Microsoft has, really courted OpenAI and their Chat GPT. In fact, they've incorporated Chat GPT into variations of Bing now. And then just last week, Google released Google Bard, and Google Bard is Google's version, and now Bard is going to be part of Google Search. It seems that's the kind of the news from this past week. We keep hearing about Mark Zuckerberg, looking at an AI that might be part of his whole metaverse strategy, and so that's been in all the headlines. Is when is Mark going to release his AI? I think there's been some beta releases, and his wasn't as ready for prime time, and they pulled back on it. And then, of course, Elon Musk, who was one of the founders behind OpenAI, and now seems to have a little skirmish with those folks, has his own Tesla variation of AI, and we're wondering about that. And then there's all these little companies that are either coming up with their own type of language learning model, or they're using one of the big ones in a specific way. So, I mean, when it comes right now, there's a lot of hype. And I pointed this out to the person who called me. I mean, if it's being talked about on Facebook, um, you know, that means that there's a lot of emotion behind it and not a lot of substance behind it. I mean, that's generally what I find in my personal experience happens when conversations happen on Facebook. There's a lot of emotion behind opinions, but usually there's very little substance. And so I personally am not investing in anything that's all about hype, because you might as well just take your money down to the casinos, right? To the slots. Go to Vegas, go to Atlantic City, go to Macau, go to your local Indian reservation, whatever is going on, American Indian reservation, Native American. I'm so unpolitically correct. I apologize. So with that said, it's something I'm not ready to invest in unless it's one of the bigger companies who's pursuing this, a Microsoft, a Google, who have a diversified strategy to begin with. As far as using it, oh my gosh, the opportunities are endless, right? And you and I were talking earlier this week about Bard. OpenAI has traditionally not been connected much to the internet, and so it doesn't have access to the most
Well, you have to pay for it. It's a premium feature. Yeah.
premium feature. It's a plugin. It's a pro version. Whereas this Bard, I mean, that's kind of Google's forte is search and being connected to the internet. So I've already seen a couple of prompts being used. There was an article in Bloomberg about prompting the various AIs to help you in your stock and stock screening. My knee-jerk reaction right now is these models are brand new. I mean, OpenAI, ChatGPT was just released last November, and I feel like they have some learning to do, even though they're exponentially learning. And ChatGPT 4 is beating people at the bar exam and beating people at becoming medical doctors. I almost feel like stock picking is, there is that component of it being an art. So I like the idea of using these things as part of your strategy. And we're actually here at Trading Trainer trying to figure out how we can come up with the best prompts to get the most useful output from these guys. But I urge everybody to double and triple check everything and not trust blindly right now these AIs. Um, make sure you take that watch list they give, make sure you give, the analysis that they give, and do your due diligence. Always do your due diligence. Just like I say, check your gurus. I want you to check me, make sure I know what I'm talking about. Check your financial advisors, make sure they know what they're talking about. Because when it really comes down to it, you have to take responsibility for your actions. You're not going to be able to get very far blaming an AI for losing all your money. So make sure you're using these tools responsibly. That's my knee-jerk reaction. What are your thoughts? I mean, you're way more into it than I am.
Well, I have two that actually really come to mind for me. And one is the Chat GPT. So like you said, if it's in the media and everybody's talking about it, um, do you really want to invest in it anymore? But more so, how quickly can this thing be adapted to our everyday life? And I think a really good example of this is South Park just did an episode, and the whole entire episode started with how one of the characters didn't want to text his girlfriend, so every time she would text him, he would just put the text into the Chat GPT prompt. And then what they realize is, oh, we could use this to do all of our work, right? So like the four of them start doing their schoolwork, and like it's been something that schools and the education system has been dealing with, right? Like
It's true.
we didn't have a tool that could go and write a 1,600 word essay in 45 seconds for us, And so the fact that South Park made a whole episode about it means that it's in the mainstream media, right?
True.
The second thing that I am constantly thinking about is like what the future looks like. And
Yeah.
part of that is I'm a big fan of the Star Wars, and in the Star Wars they have all these drones and whatnot, and we think that that's so far out, but it's not. And part of it is that this AI technology and concept is already being implemented in like robotics, right? So I don't know if you could see my screen here, but this is like a robot that fights. Like they've built something that fights back already.
Look at that.
And they like and so they like are, oh yeah, they're like beating it up, right? And so I'm like, okay, how far is that out from like we living in our everyday lives, and like a robot comes in and we're just like, hey man, your programming must be off. But like we're in the age where we're developing that programming, and we need to be conscious of it. Or I mean, even Elon Musk this week was like, oh, I think there could be severe problems with AI. And like, man, there could be. Like, these things are smart. They learn faster than we can comprehend as human beings. And how do we live in a world like that? I'm a big fan of it. I think some of the tools are great. We'll keep an eye out on the investing tools, right? Because I know there's not that many yet, but as we find a few that can help find some symbols, read through the news quickly, right? Things like that. We'll definitely share it with the audience, with our fans. But I'm excited for it. And it's kind of like I was too young for the internet boom, right? But like, I feel like we're in an AI boom now. So like how can we get in on it? Whether it's creating a Chrome extension or using it to make our own work more efficient. These tools are here to better processes, but they might eliminate work. Like it's just going to be inevitable, right?
Well, on that front, on the main street front, I kind of hope it does. I hope that, like, for instance, it gives people more time to do some of the stuff that they wouldn't otherwise do if they were too busy doing their work, So maybe there's a way. I guess the answer is if we increase our GDP but decrease the amount of effort we have to put into it, can we spread the wealth, or is the wealth going to go to the owners of the AI, right? So
Yep.
that's something that has to be figured out, because if there's no if a lot of our jobs go away, but there's some rewards being had by these AIs, and they don't cost very much, they just cost a little bit of electricity and computing upkeep. The question is can you distribute that wealth, and then can we all just like go take art classes?
That's going to be an interesting next 10, 20 years, maybe, right? That all this is going to evolve,
Mhm.
and 20 years from now, we can really see some changes.
I mean, a lot of the brightest minds, this was 5, 6, 7, 10 years ago, were saying 1940, I'm sorry, 1940. 2040 is going to be the year, right? So we're not that far from that. We're 17 years away from 2040. So
Well, the question for us and for our viewers and for the community of trading trainer is, how can we take advantage of it? How can we
yeah,
utilize this knowledge and put on some positions, collect some premium, collect some income,
yeah,
and enjoy, you know, time with the kids, things like that. So, with that being said, let's go right into your pick of the week so that we can break down some strategies and give the audience a little bit of insight into how you approach
let's
the
do it.
markets and investing. So your pick of the week this week is in the energy sector. This is Devon Energy, ticker symbol DVN.
Yeah.
What's the scoop there?
Well, I gotta say, this one was brought up to us. I mean, I've been selling premium against Devon Energy for quite a while now. This one came to us last night during one of our workshops. We did not feature it as our pick of the week, but the reason why I like Devon Energy is it seems to be maturing around a channel. As you can see here, we've got a couple of tests of support around this $45, $46 zone. Resistance zone. And so what's really nice about that SIP is that we're coming off of a bottom here, and we could we've got the signals. Let me zoom back in. We've got the signals to either open up a position, an initial covering position. So when we sell premium, it means that we're selling an option. And when we sell an option, these options, people buy these options so that they can have the right to do something between now and the expiration of that option. And depending on whether they're buying a call, if they're buying a call, they get the right to buy somebody's stock at a set price between now and the expiration of that call. If they're buying a put from us, they have the right to sell us a stock at a price between now and the expiration. So when we sell somebody one of these either calls or puts, we're taking on an obligation. They have a right, but the minute we sell it and we take some of their money so that they can have that right, we have this obligation that should they come knocking and want to exercise their right, we have to deliver. We can't say no because we took some of their money to sell them this contract up front. So in order to deliver on that right, to make sure that we can honor that obligation, we have to set up an initial covering position. And so when it comes to this, the initial covering position for us to be able to sell calls in the future, call premium in the future, would be to either buy some of this Devon Energy stock, or we could, instead of buying the stock, we could buy ourselves some deep in the money, far out in time call options that could also serve as that covering position. That would also make it so that we can then sell call options in the future. And so we're getting the signal at the bottom of this channel right here with Devon Energy that it might be time to do one of those initial covering positions so we can sell call premium a couple of weeks from now. Or if by any chance there are some folks out there with about 2 or 3 weeks ago, set up an initial covering position to sell puts. So that means you either shorted the stock or you bought a deep in the money, far out in time put option back here, maybe in the middle of April. If you did that, now is the time to sell your puts. So either one, whether you're just starting now and you're setting up your initial covering position so that you can sell calls in the future, or a couple weeks ago you set up your initial covering position in order to sell puts, now is the time to do that. So whichever side of the equation you're on, now is an action moment. And that's why I wanted to feature Devon Energy. And Devon Energy is a great symbol to do this on. It's in the sector that's no longer in the spotlight. Energy, now the spotlight is on things like banks, and it's on things like artificial intelligence. And energy seems to have gotten less and less popular, which means for us premium traders, that's exactly what we want. We don't want anything that's in the spotlight. I think Devon Energy is worth taking action on.
And are you waiting for anything to happen specifically, or it just time essentially?
Well, let's look at my favorite signaling device. So that's this fast MACD. And so the fast MACD gave us a signal on Wednesday night. So on Wednesday night, after the market closed, the fast MACD gave us a pretty good signal. It wasn't above average volume, but it was heavy and it was building, and the price action of that day confirmed. And then yesterday, actually, we got follow through, which told us that, hey, you know what? This might be the symbol that we into. So yesterday was actually the good buy signal, but the good thing about our premium selling exploits is that you can be off a day or two. So you can see already if you bought yesterday, if you bought your stock, or you bought your back month calls, or if you were already in that covering position and you sold your puts, that would have been ideal. We can still do something today, although it seems to be stalling after this morning's gap up. We may want to, if we didn't get into it yesterday, we may want to wait until Monday to see what happens over the weekend. But we're at the perfect couple of days where we might want to take some action.
All right. Devon Energy, ticker symbol DVN, AJ's pick of the week. There are a few other pick of the weeks, but you got to be part of the inside member crew in order to join those Thursday sessions. So
I'll tell you, just to give people a sneak peek, we had one yesterday, and I even told them, they vote. So what happens during our actual workshop calls is people take, the learnings that I give them, and they pre-screen some candidates, and then we all meet up on Thursday, and they want to get, my and one of my Coach Jay's advice. And so they throw their tickers at us, and we pull them up on the screen. And we, give them our 2 cents based on our experience of having that long-term, we've been doing this a long time. And then we narrow it down and we decide to pick on one that would be worth us all setting up on. So we narrow it down on one and we start the planning process. And so we narrowed it down yesterday evening down to about, I think there was 3 when we ultimately had narrowed it down. And so we put it to the group that joined us live last night to vote. And they voted on the one that I was least, I thought it wouldn't work out for most of our portfolios. It was Raytheon, right? And I was thinking, you know what? This is a little bit of an expensive stock. Maybe this is not going to work out. It turned out after we went through the preliminary planning process that this was like a little hidden gem. And even though it's a little bit higher in price for most of our portfolios, we could probably do a contract or two. So, even I get surprised during some of our live workshops. So I recommend if anybody's interested in being part of our program, now's the time to do it. I mean, it's just so much activity and so many people are doing so well with selling premium, whereas people who are trying things like swing trading or trend, there's no swings or trends happening right now. But us premium sellers that profit on sideways choppy markets, I mean, we're we're doing really well.
Yeah, and it doesn't seem like it's going away anytime soon, the choppiness.
No,
All right, let's see
no.
if we can find any more opportunities, any more gems in this week's speed round. All week, members have been asking questions from all around the world, actually, and AJ picked out a few that he thought were worth digging into. And so we'll start on over on the East Coast. This is David in Providence, Rhode Island, interested in one of those financial names, a big financial name, Bank of America, ticker symbol BAC.
All right, so Bank of America. So, of course, this is in the banking sector, but this is one of those banks that is positioned well, right? For it's a bank that's been considered too big to fail, so they've been scrutinized. It's not like one of these smaller banks, these regional banks that somehow skirted under the scrutiny and now they're in trouble. This is one of the banks that is poised to benefit if any of those mid-sized banks continue to go under. However, they are in the banking industry, which overall has been kind of hit. Right? There's this phenomena called correlation, which means if one of the banks is under siege in the markets, then they all tend to be under siege. With that said, it's stalled. It seems to have stalled ever since the first mid-sized banks failed, but it looks like it's coming off of a double bottom here, doesn't it? In fact, we got ourselves a signal back on May 15th. That signal, that was this past Monday, the signal didn't have very good volume validation. So we've been waiting to see, maybe we got our validation on Wednesday, but then we didn't get any follow through either yesterday, and it doesn't look like we're going to have follow through today. So this may be a false bottom as well. It may want to stay a little bit longer down here. So the big takeaway from that is make sure you've got a good set of signals you're following. Signals, identify tops and bottoms. And so when you're evaluating your signals, we teach people how to do some back testing strategies. One of the main things is you have to find that compromise between a signal that misses the signal, doesn't even tell you about it, versus a signal that gives you false positives, meaning it tells you about it. In fact, it might tell you that there's a bottom, and it's not really a bottom. So you have to decide. A lot of times we tune our signaling strategy so it's, we try to get it right in the middle so that it gives us just solid signals that have very few false positives and very few misses. But we can also use validation, right? Statistics and finding a way to make our signals, how much confidence do we have in this particular signal? What can we look at? And a lot of times we look at volume, we look at price action, we look at patterns, other secondary sources. So all I'm asking is make sure you've got your signaling tuned right so that you don't get in too early, and yet you also don't miss the opportunity. But it looks like we're setting up very well. I like Bank of America. I like that they give a strong dividend. I like that they give positive earnings. Let's see if Bank of America gives us an opportunity to set up a initial position so that we can sell calls in the future. So all I say is we're there. We need to wait for the signal to really pan out for us. Let's not jump in too early. Let's not get too excited and pull the trigger, even though the signal isn't there. But yeah, I think you've got something here with Bank of America.
All right, David, thank you for that. Moving on over to the East Coast or West Coast, and this is the AI name that we were talking about. At least I think it is. I would only assume it is.
Oh.
Bill from Portland, Oregon, is interested in C3.ai, ticker symbol AI.
Okay. And so C3 AI, we've looked at this, I think maybe 5 or 6 weeks ago. And I think we looked at it when it was probably over here. I think I commented on the fact that this has a little bit of volatility, but it looks like it's finding a nice base around $21. And it looks like it tends to pop up. A little bit difficult to sell premium on. And the reason why I say that is when it pops up and comes back down so quickly, by the time we get our signals to tell us that this is the good time to sell premium, we've already missed it. So that makes it a little bit difficult to trade. At the same time, though, I think that there is an opportunity. Um, a couple of different thoughts. One thought is do you want to have this particular stock in your portfolio for the long term? If so, maybe a cash secured put strategy in order to get this at a discount price. Instead of just going in and buying things with a market or a limit order, use a cash secured put strategy to buy it at exactly the price you're willing to pay, and otherwise make a premium to reduce your break even price. So that's one thing to think about. The other thing to think about is it does seem to want to slam down at this level of support around $20. Let me look over at the option chain. So they're trading every $2.50. So another thing is when we're at the top here, you might consider betting against C3AI just for the sake of selling put premium. So in other words, I talked about earlier setting up an initial covering position, something so that you can meet the obligation of selling the put options. And so when it's up at the top like it is right now, we could either short some of the stock. That's one option if you have a margin account. The other option is to buy some deep in the money, far out in time put options now. And then as this guy comes back down, if he stops yet again at this $20 mark, then we'll sell some put premium and go from there, right? We'll see if we can reduce our cost basis, make the break-even price come out, turn it into one of those income generators. It looks like it's a lot easier to sell put premium at the bottom than it is to try to sell call premium at the top. And should it decide to crash on through and go low, come on back down to this level around 10 or 12.50 that we were at just a few months ago, well, then it becomes these positions of ours automatically adjust, and it either exercises at its full max profit, or it allows you to get into this position and take advantage of the fact that puts make money when the underlying symbol goes down. So two different strategies that I've given you in order to trade C3AI that I think would do you well.
And this may not have an impact, but I would assume that just having the ticker symbol AI has some benefit to it, right? Like just because naturally people are like, oh, I want to invest in something AI, and then they do something in AI and it comes up. So
Yeah.
other than the volatility, which is very apparent on the screen,
Yeah.
I probably want to learn a little bit more about what they actually do. But that's for my due diligence homework. Thank you, Bill from Portland, Oregon. Moving on a little bit south to San Jose, California. This is Jim, interested in the housing name Airbnb, ticker symbol ABNB.
Yeah. Okay. On the expensive side, but then again, I'm brought back to the idea that yesterday evening, I thought Raytheon was too expensive, and my program participants proved me wrong. So Airbnb looks like it's got an ever so slight downward trend. Let's put a linear regression line for you guys out there. Linear regression is another name for best fit trend line. And instead of eyeballing it, the linear regression line goes ahead and calculates this best fit trend line based on statistics, doing a linear regression analysis. And so, yeah, Slight downturn. And let me zoom out a little bit more. Let me take a bigger look at this. Okay, so Airbnb has been going sideways for at least a year. Let's look at 2 years. Yeah, they don't seem to have any sort of growth. They're definitely not giving their investors any dividends, but they are showing profit. Okay, how would I go about trading this? I think that I want to be with my initial covering position. I want to be on, I want to be set up so that I can sell puts. I don't want to be set up to sell calls because there is this ever so slightly downtrend. So we're going to set up a hybrid position here. We're going to wait. We're going to wait for this symbol to come back up, probably to slightly under the 120 zone and find a top. So that's probably, it looks like from past history, that next week. And when it tops out at this next level, that's going to be my opportunity to either short some Airbnb stock. Remember, I have to do it in lots of 100, right? 100. If each one of my fingers is 10. Lots of 100. And, or the alternative to shorting the stock would be to buy some deep in the money, far out in time put options. And then that would set me up to every time I bottom to sell some puts and make money off of selling those puts. In fact, not only would I make money off of selling those puts, but at the same time, I could buy some out of the money calls as protection and roll those out. I can create two sources of income off of each cycle up and down of Airbnb. And with that slight downtrend, my initial covering position being either a shorted stock or a back month deep in the money put will also be gaining in price, so that when I finally get out of that initial covering position, when I'm exhausted in selling income, making income trades out of it, it too will profit for me on the back end. So I kind of am going to create I think that the best bet is to create a hybrid position on this.
All right, Airbnb. I always feel like they're pretty innovative when it comes to housing related initiatives and developing their technology. And I see a ton of TikTok videos about how to make money as an Airbnb
Host.
yeah, things like that. So yeah, I mean, they are on the expensive side. But thank you for bringing that up, Jim. We do appreciate all of the tickers that we get in our speed round. We're getting close to the end of our show here, AJ, but I did want to let everybody know that one-on-one coaching is back, guys. We were flooded for a couple weeks there with a lot of participants, and I know we haven't promoted it on the show for a while, but one-on-one coaching is back. I just threw the link in the chat. If you are somebody interested in learning how to utilize your portfolio, to utilize options, to get the most out of these investing opportunities, but you want a helping hand, AJ's one-on-one program is great for that. I know that we've got some new team members in the group as well. Anything you want to add there, AJ?
I mean, we have had great results with our current folks coming through the program. They've all graduated from the hand-holding portion of the program to now they're all in the trade with us portion of the program, or there's more of them coming out. And it's just been a great first couple of months of the year. And so it's a no obligation phone call with us to see if we can help you, where we might, fit into the gaps, if hand holding makes sense. And there is a guarantee if you guys do decide to be part of our program, we guarantee that whatever you spend on our program, you'll make it back by the time you graduate from the program, so that it's basically free when it comes down to it. Because if we don't perform on that guarantee, we'll keep working with you until you do make back the money you spend on us. So not only is the discussion, the conversation with us no obligation, but really the learning itself, the hand holding itself is no obligation if you think about it.
All right. And so the link to schedule that call is in the chat. So head on over there.
Have a talk with us.
Excited to have that back up, have some spaces available. We've been getting feedback, good feedback, from the program for months now. So head on over there and check that out. No obligation. Get your questions answered. Learn a little bit more about the process. All right, AJ, heading into the weekend, heading into next week. We've got a Fed rate decision in June. What are we keeping an eye on here?
Debt ceiling. And any more comments? I'm going to go back after we get off the line here, and I'm going to go back and see what Jerome Powell's talking about. Looking for Fed comments on what are they going to do next now that, it doesn't seem like a lot of effect is happening from all the activity that they did. What's going to happen in June? So is the debt ceiling going to be something that we can put in our rearview mirror? That's going to be something investors are asking big time. And what's the Fed going to do next?
All right. We're going to keep an eye on that. I think the markets have fallen off a little bit, so he must have said something.
Mhm.
We'll go ahead and dig into that. As always, if you've enjoyed the
they're
broadcast, hit that like, hit that follow, hit that subscribe button.
Tell your friends.
We do appreciate it. We're trying to push out some quality content for you guys. If you have questions, as always, leave it in the comments. Send us a DM, and someone will get back to you. AJ, thank you for your time. Once again, everyone, thank you for tuning in. I guess we'll catch everybody next week.
Take care, everyone.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.